for me, it's not whether one country is more interesting than the other. The resi is interesting all over, pan Europe now, but especially in the Nordic areas. Resi is interesting in every country. The question is, are you willing to go up the risk curve? Meaning outside the larger cities, maybe in the top 3 for Denmark, Finland, and Norway, but top 5, top 10 cities in Sweden. Are you willing to go for more value add? Are you willing to go into development? It depends on where you want to go. Now, are you looking, you have to, I'm coming back again to the risk profile. You have to look at your own risk profile and then from there decide. Like logistics is become, in a pan-European way, a very hot topic. Again, it's about your risk profile. Are you looking for a higher return? Then that's where you go at the moment. But it's going to go down as well, the return, because the yields are going down in logistics now. And again, you can get 10% in some countries, but is that the risk profile you want? Because if you want to have a core profile CBD location, but a risk return of 10, then you have to go into some riskier projects, and that's it. But I think maybe you can say more about that, Anders, but because you have a value add fund going on at the moment. But that's the thing, you need to understand. Right now what I see is a lot of investors who wants a 10-year lease contract, they want CBD location, they want best locations, and then they want a cash yield of 5%. Ain't gonna happen in the Nordics. Unless you have LTVs and up to about the ceiling and a little further, but that's not gonna happen. So you have to decide what you want to do, but it's not gonna happen in most of Europe anyway. I mean, top cities, Spain, France, Germany, you will not get that risk return profile. Or that return on a core property CBD location anymore, unless you're going to second tier cities.
We don't do any residential, so we're happy to see that a lot of money is flooding into that area and maybe leaving some room for us to maneuver in the other asset classes. We will look at hotels, we will look at offices, of course, shopping, both high street or retail, both high street as well as shopping centers, and logistics. So those are our competitive areas in which we've grown our portfolio to 30 billion over the past years. Now, looking at those asset classes in the different regions of the Nordics, I think Sweden qualifies for all of them. Then again, it's a matter of pricing and accessibility, etc. Denmark, we've tried to commit for retail on a shopping center, but an almost local investor who's just on a conference call now snapped that away. And we're now looking at potential offices. But again, when things go into an online bidding process via eBay, we do feel a bit uncomfortable with that kind of a process. Even though it's a nice and transparent one, it was a bit difficult. And again, Denmark for us will always be Copenhagen. We were actually there for 2 days looking at Copenhagen and Malmö. Is there is the Eurozone region really coming together? Is there added value in that region? So we're targeting that. We've opened up our because we're not invested in Denmark. We've looked at that very strongly. We visited Catella there as well, and have tried to have a look at that market. The challenge there will be the size, i.e. when we do commit, like we did for Finland once upon a time, we're at 800-900 million. We want to have 8, 9, 10 deals. That's the kind of market and structure we like. Now, if we do that in Denmark, there aren't that many assets to create. It's a very, I had the feeling that Denmark is very residential driven at the moment, with an office here and there, and a bit of high street retail. So that could be an alternative. And that's also an institutional market. Also, not so much resi, but very institutional, unlike other markets in Europe. So that could be an alternative. And of course, we'll look at the offices. But then you need the quality and again, we like going into newer buildings with the leasing. If it's a good location, we can take a view on. And logistics in Denmark wouldn't be there. Now, if I look at the other markets, we spent a lot of time looking at Oslo and Norway. Challenging, simply due to the hedge costs for us. improving as time moves on and oil becomes cheaper. Could be an alternative for us. We liked one or two assets that came on the market last year or this year and simply weren't competitive. And that's as it goes. A local insurance company will outprice us. If anything, we would go very central, Oslo. And the 4% doesn't, as a global investor, 4%, I mean, it's not the kind of return we'd like to have. I prefer 7 to 8 in a core location. But that's obviously not happening across Europe at the moment. So the 4% in Stockholm doesn't break my heart. It doesn't kill our investment profile, as long as the dynamics behind it are strong. And Finland, again, we invested 100 million beginning of the year. Will we look at Finland on the office sector presently? Probably not. The retail sector is difficult. I'd like to do high street, but it's small. It's just, correct me if I'm wrong, it's almost non-existent. Logistics at the moment, I'd be careful with. I'm not that hyped about the growth potential. I have more, the paper industry being in difficulties, and I see it a bit, hopefully there will be a curve up and down at the moment. So there's a lot of, for us the focus is Stockholm, Sweden, look at Gothenburg. Malmö, I'm a bit worried about the supply coming on the market. It's strange that there's an increase in vacancy, which is unusual because a lot of pre-lets usually reduce and quality. You have that one area around the central station, which I think is great, but it's already sold more or less, and the dynamics are extremely flat lines of leases going forward. Copenhagen, hopefully in offices, logistics in Sweden and in Sweden, and high street retail, ideally in all of them. Oslo, preferably as well, but also we just have to deal with the hedge costs. But the 4% is. It also, Paris is less, and so is the UK, and so is Munich at the moment, and so is, a lot of other places. You just have to deal with it.
So the yield is net. That's just a market variable to deal with, and we are in a new paradigm.
Again, it's 350 basis points above the cost of capital or of interest rates, or even more. So if that's your comparative, 2007, that turned around, and it was the other way around. So if you need that, and if everybody continues to say that's the long-term story, and the interaction between interest rates and real estate returns are so high, the likelihood is that there will be a pressure on it, even if it does move away from the actual underlying fundamentals. And those are the ones that you need to look at. You got to buy assets that you're going to be able to release. Ideally, you may even capture some rents that are below the present rental value. So even if cycles come back down and you just capture the same rents, you're still okay on the cash to cash. And that would be the same for the Nordics as anywhere else across Europe. We'd like to do more. It's not an easy one to access. Ireland was easier for that, but we managed over 2 billion in Europe, so I'm sure we'll do fine. And we managed 3.5 billion globally, 5 billion of transactions. I'm sure that some of that will be dedicated to the Nordics. Sure.
Obviously, you have the open-ended funds and the special funds.
Mm-hmm.
What is it mostly for the open-ended funds you're investing in the Nordics, or is it always vary?
It's on the krona-nominated assets. It's usually the open-ended funds due to the hedging costs. The specialfonds, you take into hedging. You can hedge on a fund level on the big open-ended funds of 10 billion euros a fund. That's easier, most easily distributed. The specialfonds usually won't, hence why in Finland they would. In the other countries, it's a bit more of a difficulty. So it's really the open-ended funds that target the majority of the cities or the majority of the Nordic cities.